Hello everyone, hope you're doing well. Welcome to another and final market update video for the week. I want to keep it quite close to Sunday so we can talk about the weekly close a little bit. And then schedule-wise, on Monday, we've got weekly open with myself, Don, Ledger, and Luke. Then I'll do a live stream on Monday so we can actually talk for a change instead of me talking at you. And then usual stuff, newsletter on Tuesday, Duck on Wednesday, and I think we'll do a casual Friday on Friday now that Don has stopped partying. I think. As always, brought to you by FTX. Go get the mobile trading app. Some stuff is green, so you can bait your family into buying the dead cat bounce before everything goes to zero. And it's fine, it'll come back, just not the coins that you chose. So, weekly close is 10 hours away. Annoyingly, British summertime is now in effect, so the daily close is no longer aligned with midnight UTC. Lol, what do you mean daily close? It's a 24/7 market, bro. Yes, but, these things still matter. It's how candlesticks are formed. Session times are still delineated using normal time. So even though it's still a 24/7 market, you can still break it down into, time-based periods. So looking at that, specifically the weekly time frame, it looks like some positive stuff is emerging. Specifically, if we look at very recent weekly market structure, if it closes something like this will be the first kind of tentative weekly break in market structure, which is to say a higher high, right? Whereas you've got like a high here, or this level of resistance, and closing through it would be sort of a mini range breakout within this consolidation in general, which is a good sign. And also, if we kind of look back in terms of where that level comes from, it would also be a break above this prior market structure low, which very recently has been providing a lot of resistance. 1, 2, 3, 4. We've talked about this several times, but it looks like a high time frame attempt at a breakout, which is really good, right? So, is that it? Do we kind of break out on the weekly and then go to infinity? I think there are a couple of areas which are structurally at least as important, if not more important, than sort of 43, and they come from a couple of time frames. So, as before, I think on the monthly, if you take the bottom of the monthly cluster, that's where a lot of the recent resistance has been going on and where a lot of trading has taken place. At the same time, I do think there is an untested level, which is the monthly cluster top, and it also happens to fall just above previous month's high as well. So you can start to see that this level is important, and it falls at around 47, 48K. If we look at what that looks like on the weekly time frame, you can kind of see it there, right? So you've got the top of the monthly cluster in red here. It's resting above all these highs that have been built up over the last few weeks of chop. Itself, it's arguably within this kind of supply zone rectangle line make boing structure, but monthly resistance overall. But arguably more importantly than all of that, I think if we add our boomer trend following metrics, you've got like this, the three horsemen of the trend following apocalypse: the 21 weekly, the 50 weekly, and the 200 daily. None of them have been tested in the weeks of chop that we've had. The market's come close, but this kind of mean reversion target hasn't been met. And as we've discussed, you can start to see a real kind of cluster of those. Well, that's a bit generous. A cluster of those levels between kind of 48 to 46K. I spoke to Will Clemente, who does a lot of on-chain stuff. For him, I think it's sort of short-term realized price. What other on-chain metrics, which are kind of trend-following proxies, also align around 47K. We know that the boomer moving averages are there, and we also know the monthly cluster is there. So there's like a lot of confluence. Yes, there was a lot of confluence at 43, 44, but I do think, I'm happy to argue that this 47 area is even more important, right? Now, the good news is, if that breaks, then a lot of the arguments for downtrend, or at least kind of short-term downtrend, disappear, because at that point, you've basically had, if we kind of take a zoomed out perspective, the range high traded, the range low traded. If the market gets accepted above the range midpoint, where would you generally look? You look back towards the range high, right? And that move leaves you plenty to capture, both in Bitcoin land and altcoin land, especially kind of, 48K plus into 60K ish. There's a lot to do there. But for the time being, that would be a test of resistance. So that's worth being aware of. This is all stuff that's more or less covered in the previous video, but just to kind of show you where these moving averages have fallen, that there's just a lot lining up in that area. I think it's pretty prudent. If there's anywhere to be cautious, I'm still not happy with the idea of selling the same resistance at 43 for the fourth or fifth time, even though it looks a bit slow now. Whatever, we'll discuss that in a moment. But in terms of high time frame structures that matter, I like to do business at the extremes, and the extremes to me are 47 to 48k, and there's plenty of upside to capture should that area roll over. And I think a lot of buying will pretty much activate through those levels because of how much confluence there is across several different trading systems. Now, in terms of where the market is right now, it's it's awkward that we came into this fifth test of resistance into the weekend, right? Because generally we want like a busy, liquid, active session or part of the week to fall within tests of high time frame areas, because we know that weekend moves generally have maybe a higher likelihood of being reversed or being mean reverting, whatever. Um, what I generally don't like to see, and I've said the word generally a lot, but I guess that's how we operate, right? What I generally don't like to see is a market that breaks through a key level and then the candlesticks get really small. I know that sounds really juvenile, but it makes sense on account of the fact that if you want to see a squeeze at a level, if we think about what that actually means from microstructure terms, right? What we want to see is the traders who are selling this level for the fifth time, we want them all to be wrong all at the same time. And if those short positions are wrong, we want them to cover aggressively. What does aggressive short covering look like? It looks like buying close to or at market, which fuels the market to continue moving higher as you get shorts covering at the same time aggressively, plus new longs entering the market on a breakout. That's the kind of formula for acceleration. Anytime traders are forced to make a decision, that's your formula for acceleration. So when you don't see that and the market trades at key levels and kind of just slows down or starts to soak or gets absorbed, that's slightly less preferable. We saw Bitfinex throw up some big sell walls here, which aren't usually psyops. I think FTX is really the more psyopy exchange in terms of likelihood of reversal from big sell or buy walls. Bitfinex tends to be a bit more sticky. I'm not going to read too much into it. I think the analysis is still the same, which is essentially that 47.48 is the much better level. And as long as this 43k push doesn't turn into like an obvious deviation, I still think we see this tested, right? I'm not a massive fan of the short-term slowdown in momentum, but I'm, for the moment, comfortable writing it off as a kind of slower weekend price action before the Monday traders step in. And if you kind of just look at how this trend came to be, it does look slightly more reasonable than the other attempts at this level, right? Like near vertical move, got full retraced, literally vertical move, got full retraced, and then you've got something a bit more reasonable on this occasion in terms of trend, and which also provides clearer invalidation, which is to say, if the trend line breaks down and doesn't result in some sort of neat deviation, it's probably scuffed. Or as per the previous video, any price action that's not accepted and obviously fails back below this key level, that would probably suck as well. Although just for the sake of my sanity, I suppose, I do want to see, as I mentioned, this 47, 48k trade. At the moment, the market's above resistance. It's kind of hovering, and it's really a coin toss whether that's weakness, weekend price action, some combination of both. It's kind of whatever. I'm not really in a position here. Well, it's not really. I'm not in a position here because, as I mentioned, for me, this level's kind of given you all the obvious opportunities you could expect from it in terms of the available evidence. If it ends up really ugly, failed breakout, there may be a trade there, but I would much rather do business at the 47, 48k decision point, which would either be just clear continuation towards 60k, and there's plenty of move to tag onto that if that level of resistance gets completely smoked and the market is accepted above it, or if it turns into just your kind of bearish retest trade and then starts to unfold, that will turn into a pretty decent de-risk type of situation. For me, flat at the moment, not interested in selling 44k. The slowdown is a bit meh, but given it's the weekend, I don't want to read too much into it. If it rolls over, wouldn't be great, but probably it would continue to be range bound if that's the case. I would like to see a push to get a test of the higher levels, and then it's here that we can come to some sort of higher time frame trend determination. I just wanted to comment on kind of lower time frame price action. It's a bit slow, but it's also a bit weekendy, so I don't mind it too much. In general, when you get the market testing these levels where there's been a lot of business done, you want to see one side really being wrong, and really being wrong generally means aggressive short closing and or long closing, depending on whether it's resistance or support. So I want to see that pick up a little bit, take us to 47, 48k to the decision point. Otherwise, if this is where momentum falls off, then we're still probably range bound, which would be a complete pain in the ass, and we'd never hear the end of it from the duck. That's really all. So next stream, that is to say on Monday, we're also going to cover ETH, I want to cover the 2022 trendy stuff, which is from, Lux, Stargate, the Bored Ape Yacht Club coin. We'll look at Sol Luna AVAX, your altcoins, and just have a chat. I just wanted to give like a quick Bitcoin update. TLDR, weekly close is looking good. Given it would signify a local breakout, but it's really 48k where the trend metrics start to get converted. Where it is at the moment, it's the millionth test of resistance. If the level's going to roll over, it needs to speed up. Whether this is weakness or just slowdown isn't entirely clear given weekend price action. We'll be able to tell on Monday. Make sure to tune in to both the stream and weekly open, all that type of stuff. Hope this update was somewhat helpful. I just thought it'd be nice to revisit why, it may seem like there's no difference between 44 and 48. You'd be forgiven for thinking so, and I don't necessarily disagree, but I do think there are some higher time frame structural differences between those two areas that are worth noting, and also just wanted to give a bit of an update on this trend and the market currently closing above 43, which is a good sign. Enough rambling. Hope you had an excellent weekend. We'll see you on Monday. Lots of content, normal live stream stuff, all back next week now that Don has stopped partying for at least like 4 days if we're lucky. Take care. Thanks again to FTX for supporting us. Go get the mobile trading app. We'll discuss on Monday what terrible altcoins to get your family members into, and that's all from me. Goodbye.